Hey everybody, morning. How's it going? So we got David, Terry, Don, Ed, B, Rob, Gaten, Dan, Diane, Darren, Jim, Mad, Ed, Svenborn, Craig, Cliff. Good to see everybody. So the market's kind of been choppy, right? Like been chopping down, grinding lower, however you want to call it, I guess, since kind of early October, right? I mean, we had the big dip October 10th, and it just kind of keeps grinding. And why, right? What's the reason? Why is everything seemingly selling off at the same time? It's a good question. Like, why? What what magic came together, right? Makes you think about it. I've been thinking about it. I've been trying to figure it out. So, welcome to the show. If you woke up today and you looked at your portfolio and you just wanted to crawl back in bed and pretend it's, back in the summer, or maybe, you know, it's all the way back in 2021 and everything just keeps going higher. You're not alone. I mean, it's been a sea of red out there. Everything getting sold off kind of, it's like this market wide fleecing out of anything that had leverage, right? And it's like, why did it go down so fast? Why did everything seemingly we were trading evaporate? Yeah. I've been trying to figure it out. Like I've been looking at it, and it's kind of like the market took one look at the Thanksgiving pants you ordered and realized that it's been partying a little too hard this year, and they don't want to come to the Thanksgiving party. I mean, it's almost like a full blown panic attack over the last month and a half or so. Everything's been on sale, and I don't mean Black Friday sale where you get a new TV that's awesome for super low price. I mean, it's kind of like a going out of business sale where the shelves are bare, the mannequins are missing, the pants look a little crazy. Stocks, cryptos, even things that, safe havens been selling off, like gold and bonds. I mean, everything's been taking kind of a nosedive. We saw this kind of happen a little bit in 2022, but then you look at the indexes and they haven't really budged all that much. And you're like, what the fudge is happening? What the fudge is happening, right? I mean, we're seeing everything kind of take a nosedive. It's like everything quietly got in a group chat, decided that everything's overvalued and we're going to flush everybody off. Taking cliff dive naked. I mean, so what in the name of Jerome Powell has been going on, right? I thought price stability was the name of the game. And I've been reading into this stuff, and I've come up with a few ideas. First off, it's kind of a classic tale, a three-act play, financial drama going on. I mean, so we've got the Fed, and they're kind of the part of like Scrooge, right? Remember all that free money, the cheap loans, the endless stimulus? Well, Federal Reserve is kind of starting to look like the ghost of Christmas future. It's showing us a world with interest rates, high interest rates, scary stuff. I mean, they've dropped these hawkish, anti fund comments that maybe we can't rate cut anymore. Maybe we might have to raise rates. Maybe inflation's out of control. Maybe, it's a complicated environment. And as those Fed members get out there and speak, you know, the narrative changes rapidly. And, we kind of made a bottom this week on a collective of them going out there and saying, hey, we're not sure. We still think that we might cut rates coming up in a couple weeks here in December. And, the market that has the attention of a goldfish, like 6 Second Tom on 50 First Dates or whatever. I mean, you know, we're finally realizing that the free money punch bowl has been taken away. And there's fits in the system. And you look at the global, there's been hundreds of rate cuts globally. That's not sustainable into next year. Like, we can't just keep cutting rates, because rates, when they get to zero, they don't go lower. And so let's be honest here. Possibly the sugar high is going to wear off. The market's been on an absolute tear. The S&P had its best run since the COVID recovery. And funny enough, when you look at it, the COVID dip and the dip we had on Liberation Day were basically the same size flush out. That recovery, not normal. What happened after we got that COVID recovery? 2022. Are we doing the same thing now? Possibly. I mean, that run wasn't normal in COVID, and it's not normal this year. We had no pullbacks, and back in 2021, it was a market that ran high on stimulus. The relief of the recession didn't stick for COVID, but it wears off, right? Even though we did that Liberation Day dip and we recovered very quickly and no pullbacks hardly at all, sometimes we hit the wall. Running at the red line, you can't run the race car at the red line forever. So the good news, though, like the U.S.-China trade truce, I mean, now we've already got it baked into the pie. What's next? What can cause more liquidity? And I think all the players are starting to look around and look at the circular firing squad that is AI. Look at even Google CEO came out talking to the BBC yesterday, saying, or maybe it's earlier this week or last week, I don't know, a couple days ago. He's saying, this thing is a little crazy, and Google isn't going to be immune if the legs come out from under AI demand. If something shakes at the bottom, Google's probably not going to be immune to that. And our national credit card pretty much maxed out, right? I mean, 38 trillion, 39 trillion, 40 trillion. Where are we going to stop? With interest rates high, we've got to pay the bills. And governments around the world are looking at their balance sheets and realizing that they've been living on credit for a little too long. From the UK to Japan, the bills are coming due, and this isn't just some boring bond market stuff. It's spilling over. When countries look broke, their assets start looking a little less appealing, and when we do it globally all at the same time, problems come. Let's talk about the elephant in the room. That's one that's lost $2.2 trillion since Halloween. Talking about AI. The golden child, the darling of 2025. Believe it or not, in the last 19 days, the AI darlings have lost $2.2 trillion. Why did it hit you? Probably because you had exposure to it. NVIDIA, Meta, Microsoft, Oracle, they've all collectively lost more money than the entire GDP of most countries. I've gone from people saying there's no bubble to a lot more people asking, is it really a bubble? Could it come apart? And this has all happened in the span of a few weeks. I mean, the fear is palpable. And according to one survey, 45% of fund managers are now calling the AI boom a major risk. Major risk across the stock market. But here's where our story can potentially take a little turn, get more out of the doom and gloom. Maybe this is the part of the movie where you have to decide if the hero is about to die or are we getting ready for a comeback? Are we going to change the narrative? So Nvidia, the kingpin of this whole operation, is down 11%, losing over $500 billion by itself. But they have earnings today. And get this, their CEO has been bragging about having $500 billion in orders lined up for the next 2 years. He's already bragging about that before we even get to the earnings. So, is this the bubble bursting, or is this the sale of the century right now? And we're about to take the next leg and throw this baby into overdrive. So the earnings call after the close today isn't just a report. It's kind of a high stakes poker game for the entire market right here. And speaking of poker games, Bitcoin, our favorite digital roller coaster, we're back. We reset back to the beginning of 2025. We wiped out the entirety of 2025 gains after soaring to over 126,000 just like 6 weeks ago. It's now curled up in the corner below, right at 92,000 as I went live this morning. Technically, by mainstream financial media analyst metrics, it's a bear market. Bitcoin itself lost another $500 billion in value. So between Nvidia and Bitcoin, that's $1 trillion wiped off. I mean, it's kind of the financial equivalent of peaking in high school, right? So why? Why did everybody start selling? Well, classic. When investors get scared, they dump everything. Dump everything. When the market gets spooked, you dump the risky assets. Bitcoin's the riskiest of them all. I've not minced words about that. People are taking their profits from the good times. And guess what? Liquidity on the whole crypto market looking a little thin. And again, here's opportunity. The last time Bitcoin took a dive like this, it took a rip to all-time highs. And depending on who you listen to, maybe it's a good time, maybe it's not a good time to add to your position. Others keep reminding you that winter is coming. What's crypto winter? It's a period where we typically spend around, 12 to 15 months in a relentless correction, usually pulling down 70 to 80% from the all-time high. The question is, are you buying a coat for the winter, or are you buying a ticket for SpaceX's rocket to the moon? CNN's Fear and Greed Index is screaming extreme fear. And as the saying goes, our friend Warren Buffett, the time to buy is when there's blood in the streets. When extreme fear is out there and you don't feel like buying, that's the time to look for the deals. If you're the cautious type, you like to sleep at night, maybe you look at the boring stuff, right? Gold's up 54% this year and still up even though it pulled back. You could hide out in treasuries. You can invest in AAA rated bonds, JAAA, PAAA, T-bill, bill. It's not really sexy stuff, but somewhat safe. It's the financial equivalent of having a warm blanket and a bowl of soup, curling up on the couch. But if you got a stomach for the chaos, this is where fortunes can be made. Are you buying the dip on these beaten down AI giants, betting on the future? Nvidia's earnings are coming up today. Are you scooping up some discounted Bitcoin? Or maybe buying a lottery ticket for Nvidia's earnings report tomorrow? I talked about an $11 million bet somebody placed yesterday. It's kind of crazy. I mean, the market's a hot mess. It's emotional. It's irrational. It can remain irrational way longer than you can stay financially solvent. It's scared. The Fear and Greed Index maxed out at extreme fear. For savvy investors out there, fear is another word for opportunity. Take a deep breath, center yourself, look at the panic, decide which story you believe is the next path for the market. And that's what I got. Hopefully this hit home a little bit. Don't forget to, hit the bell for all the notifications and make sure you're subscribed and a channel member if you want to. If you like this kind of work, let me know. I welcome the feedback. I spent quite a bit of time digging into all that stuff. Just trying to figure out the narrative there. What's going on? We pushed this up. So where did the liquidity go? People put it back in their bank accounts. Right? It doesn't necessarily flow to anything in particular. When we risk off everything. We reevaluate. And then we flow back into things. So that's why there's nothing really that seems like a great deal right now. That's just, like, you can't follow the flow. Now, it seemed at the beginning of this, a lot of the flow came out of Bitcoin, started coming out of Bitcoin, started coming out of gold, started flowing into NKD, but then NKD, the Nike, topped out too. And in the past couple weeks since Halloween, as we've seen AI get sold off, NKD's flowed back too. So it's a global kind of fleecing, if you will. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So if you desire personal financial advice, hire and consult a financial advisor, and don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Be careful out there. Nobody's watching out for your account more than you are. Some of you hear me say this. Some of you don't. You've got to watch your own account. You've got to make your own decisions. Nobody cares about your money more than you do. I promise you. Not even me. Like I try to help people. I try to do things, but what you're comfortable with trading and risking in the market may be completely different than what I'm comfortable with trading and risking in the market. Plus, you probably don't do all the same things I do. Right? I have this sitting here, cranking away. All time. $34,000. Year to date. Almost $35,000. I started this tax day. I sit here and do this, work on this every day. Cranking this up. It's not a big account. By some people's standards. By other people's standards, it's a huge account. Thanks, David. I appreciate that. Family appreciates that. You've got to have something in the background that's cranking. Like, you notice there's none of this. If your account looks like this, what are you doing? This is reliable. That's what I'm working on right now. I sit here and do that in the background. I share this with my Termite Trading Lab group. This is like 300 trades or something like that. 300 or 400 trades. It's a lot. So my goal to build this into an account that generates $50,000 a month. Right now, I'm short of the goal. When's that goal going to happen? Probably in 5 years. Probably going to take me 5 years. Maybe longer. Maybe shorter. My guess was 5 years to do this. Doing pretty all right now. Look at the 3 month, 10K. So 3 month is only twice what the month is. I'm growing it. Trying to make it reliable. Sustainable. Year to date, 34. That's 7 months. Divided by 7 months, I've been averaging about 5K. A little lighter than 5K. It's edging up. Had some big wins in there. Had some, that was a big win. I've got other ones that are out here that could do that again. Now, even in the face of the sell-off, still taking it higher. NKD, probably, maybe not done yet. We probably have some more downside potentially. S&P. So here's what we kind of set up yesterday by breaking down lower. Look what we potentially did. A, B, C, right there. Does it have to hit the daily roadmap line? No, it could just stop right here. That touch yesterday could have been it. But this confirmed that we had more downside when we got below yesterday. Got to be careful right now. This correction can get worse. Could we come down here? Yes, is the answer. Can we go to the 3-day? Yes, is the answer. Could this get even worse? Go down to the weekly? Yes, is the answer. You're like, oh man, that would take back almost the entire Liberation Day rip. You would be correct. Been warning about a big pullback potential. Now this little baby pullback. What's crazy though is how much money flowed out of the market in this little baby pullback right there. Especially in high risk names. The economy and the stock market work in complete opposites. The economy, higher prices, lower demand, right? Price of milk goes up, you buy less milk. Price of beef goes up, you buy less beef. Price of chicken goes up, you buy less chicken. Price of TVs go up, you buy less TVs. Price goes down, you buy more. That's the way the economy works. The stock market, when prices go up, we buy more. We want to get in on that. FOMO's real. You're missing out. You go invest in the stuff that's going up, right? You don't buy the stuff going down because the dip can keep dipping. Prices going down bum people out. They sell. Makes prices go down more. That's completely opposite. That's why the economy being hot doesn't mean the stock market's hot. Economy being kind of rocky and sucky doesn't mean the stock market's going down. So when you listen to economic news and data and make decisions about trading, why are you doing that? Those two things work opposite. And they're not necessarily correlated. Crazy enough. It's difficult for a lot of people. Now the 4-hour sit up here. It's pretty flat right now. With the chop we've had from back here in October, right up to the end of October, where we made an all-time high, and then fleeced it back right to that October flush out. This is kind of the level to watch. If we get below that, we're probably coming down to the daily roadmap line. This would be the target. So right now, this is the support zone where we've made that low October 10th and where we made that low right there. That's kind of our support zone. Right in here. If we take out that support zone, probably coming down here, 6,400. So we need this 57 or 65.70. Reading it backwards. Need this 65.70 zone to kind of hold. Need to break on back higher. Go back up through the 4-hour roadmap line to be able to get on up here. Now, this did take a bigger drop than I thought we would. And when we broke below there, lower low was the game. Holding on to this is positive for still going higher. It just becomes a bigger move here. This moves back over here. This correction is the correction here. And then this kind of copies this. And we can take this back up here. This may take a little longer, may push us out well into December. And then guess what? Probably taking a bigger step back. So as long as we can hold on to the zone, still the upside potential. If we break down below here, this little guy, yikes, because it can get worse. Now, everything kind of hinges on what happens here. If this flushes out, think about it. That's a $500 billion. That went poof. Every dollar this moves is $25 billion of market cap. Or 24.3, I guess. You know, $24.3 billion in the market. For every dollar this moves. There's a law of big numbers right here. How hard is it to go higher? It's real hard. How hard is it to go down? Not very hard. If people are scared, probably flushing it out. Now, companies don't usually start releasing good news before earnings unless they're really excited about what they're about to tell you. Yesterday, I talked about this quite a bit last night. Yesterday, I saw a big order, about $11 million. You know, somebody spent $11 million. This is not notional. This is what they actually spent in premium. Buying 170 calls. For next Friday. Not this Friday, but next Friday. Earnings is today. They played out 1 week and spent $11 million. You think somebody wants to spend $11 million? Now, somebody said, well, how do you know that's not somebody sold those calls? You don't sell calls down here and lock in a lower price than you could get today. If you're going to sell calls, you sell calls up here, above price. This is a big player buying calls. They only spent $5 a premium. The rest of it was intrinsic value from yesterday's 180 price we were hanging out at. They're counting on a big pop. Now, just to break even, they need like 190. To see some upside, they're going to need it back up here. Maybe even up here. I don't think they know anything. There's degenerate gamblers all over the market. Maybe they know something, maybe they don't. There are degenerate gamblers everywhere. So they spent $11 million buying calls at 170 for 10 days, basically. Now, how can you play that? You could buy a 190 call, sell a 200 call. If they're going to be right, You know, I spent $3 doing this with the potential to make for this to be worth $10 next week. Went out a week. Joined the Degenerate Gambler Club right there. Spent $3. I played upside. You know, this was playing upside, but spent a lot of money to do it. People that spend this kind of money don't just usually blow it. They're looking to double or triple it. To double it, we'd have to be up right up in here. This is a potential roadmap bounce. And it may do nothing. You know, essentially, they're risking $5 if it does nothing. Now, they're risking like $17 a contract if it dips. They're thinking we're not going to dip. They're thinking either flat or up. So we'll see what happens. We'll see what happens. Looking at other things. NASDAQ still has potential to dip a little further. Be careful out there. That's the A. That's the B. That's the C potential. Right down in there. Now we have gone lower low. That's the only requirement for this ABC to be done. So this could be done, but it could get a little lower. It doesn't look like 5 down. It doesn't look impulsive. It doesn't. When I started warning about Bitcoin, ES and NQ don't have that kind of price action yet. So I don't think that we're in for bigger downside. When Bitcoin came off the high up here in October, it set up a 5 down, 3-wave retrace, and I warned that we were about to see a bigger flush out, and that's exactly what we got, right down to my ideal support. Now, can we hold on to this? That's a big question mark at this point. I don't have the next piece. Like, price action hasn't told me what's coming next. We're down to the ideal support. If we can hold on to it, start doing bullish things, we can go back and make the all-time high. We can hit 150 to 170K. It's possible. Nothing's been broken yet. But if we start below this zone, it's likely we're in for crypto winter, which means we're going to maybe find a bottom sometime around July to October 2026. And we're probably going to relentlessly drop down there until that time frame. Probably targeting around 30 to 40K for the bottom. If we break down below this zone. There's still a chance to save it if we do, but that tips the odds. If we get below this target zone right here, if we get below that, it tips the odds that we're into this right there. That's the warning. I don't think, my personal kind of belief right here is that crypto needs one more flush before we can go higher. That may be a spike down in Bitcoin that scares people to death. Spike and recover. Ethereum kind of needs one more flush out. Lots of other stuff needs another flush out. This one right here. A, B. Guess what? We need the C. That's what we need to be able to take this higher. Needs to do another flush out. Ethereum needs a little bit lower. Solana needs a little bit lower. That's kind of our biggest coins. Solana in here. Yeah, XRP's climbed its way up here. Tether, the stable coin, so it doesn't really, price doesn't really move. Stable coins are now about $300 billion in here. That's $300 billion of treasury buying, basically. Huh, cool. 300. Oh, that's cool. 300 billion. So with the Genius Act back in the summer, the Treasury created a buyer of last resort of sorts for treasuries. That helps push treasury prices down, helps alleviate prices, but the treasury market, it's kind of crazy when you start asking AI to help you know who holds all the treasuries. Top 10 holders only hold like, I don't know, like maybe $10 trillion in treasuries. The United States holds most of it. We hold our own treasuries, hold our own treasury debt. This is treasury debt. They created a $300 billion buyer down here, I think in the hopes that this would grow bigger. You can see almost 200 billion of it's right there. And in USDC, and add in all the other little coins down here that are stable coins, it's roughly $300 billion. That's a drop in the bucket compared to 10 trillion. But when you ask AI, there's like supposedly $20 trillion of treasuries out there. Where's the other 10 trillion? It's a long tail if the top 10 holders only have 10 trillion. It's kind of interesting. I started trying to figure it out, and AI kept telling me, like, it's difficult. Like, these numbers aren't published. We don't really know. I'm like, seriously? The most powerful thing that can search the internet doesn't know? So, be careful out there. NKD probably might need a little bit further down before we can bounce. This bouncing, though, would probably take everything with it higher. Seeing the dollar come back up strong. If this breaks out above the highs, probably going on up to 102. And that can kick off a big short squeeze in the dollar and take us higher. Short dollar was the big trade of the year. Look at this. The biggest trade coming into this year that most people don't know about, hadn't heard about. Short dollar. Apple. Potential to be done on this correction. ABC. That hit the ideal spot. This was the target. We're at the top of it. Rallying strong today. Let's get the fudge out of here. Amazon. This is the warning. We're down below the roadmap line. This can come on down. This can come all the way down here. You may not believe it. You may not want to believe it. This looks like a giant corrective. A, B, even though we went up higher, that's still okay. That's still in the rules. This may come down here. ABC. Google, still flying for the sun. About to hit that 305 targets I've been talking about. I didn't think it would sell. I thought we were still going higher. May be able to, get the mustard to go on up to 350. Meta, looking for this to bounce. We're at the support. I want this to hold this zone and bounce. This is opportunity. If you think we can hold, this chart supports a big upside potential for potentially several years. Could be a double from here And it's not going to be without pullbacks. This is going to have pullbacks and probably be something like this. You have the stomach for it. Microsoft. See, this is not bouncing like Apple yet. This still has potential. And we fully hit the roadmap line yesterday. Full hit. But I want to see this come on down just a little bit. But technically, we hit the ABC. So this could be done on the correction. It's satisfied going lower low. I think it looks better with a little deeper push. Makes a more concrete support zone in here. If we test this just a little further down. But it doesn't have to. Could be done right there. That satisfied the ABC proportions and satisfied the lower low. Could be done. Upside on Microsoft, upside. Still 565 right there. Now this one moving $1. $1 for Microsoft is $7.4 billion in the market. $1 for Nvidia is $24 billion in the market. So Microsoft has to move $3 to be the equivalent of moving $1 on Nvidia. A little more than $3. Tesla. Still hunting support here. Was that good enough? Or, you know, it really makes me question if we're going to have to dip one more time with the way this is not. There's no enthusiasm here to go higher. It may mean one more dip right in that daily roadmap line. Now, if we can break out, fill this gap, probably tip the odds we're going higher. Right now, ABC, it met the proportions, could be done. Next support down is here. Resistance is this gap, and then that 618 right there, 435. If we can get above all that, take a cruise higher. Netflix, I suspected the split would be bearish. So far, that's a 1, 2, potential 3, 4, 5. Put us right down in here, somewhere around 100 on Netflix. Few things popping. Not a lot today. It's kind of a meh start to the day. Tycom, look at that pop. Holy moly. Ridiculous. So when things are ridiculous, you got to watch out. You know, this can do the Oracle thing and bring it right back. Although, look at Dycom. They're not. That's very similar to Oracle, right? Giant debt, low cash flow. Reasonable numbers here, but it's a debt-fueled, intense thing here. $1 higher is only $28 million in the market. So this popping 43 is not big money. Could have made big money, but it's not a lot of money flowing in and out of the market. Light, probably going to keep grinding higher. 342, 700 above that. Lows, hunting for the low here. Holding on to that, holding on to here would be positive for going higher. But if we get back below here, watch out below. CEG, look for that to maybe hit the roadmap line. A lot of these were really lofty. We're seeing a lot of things really lofty, and that's why we took a lot of the loft out. We did it pretty quickly. This came back to the roadmap line. If we bounce here, get above here, go on higher. Oklo probably has a little bit lower we could go. Hit the roadmap line. AppLovin. If you don't have the roadmap line, go to the channel homepage. and give you the code for free. If you're like, I don't want a code, I don't want to mess with code, $5, links in the description. You can get it, put it on your chart, easy button. Easy peasy, lemon squeezy. DoorDash. The Uber, Lyft, DoorDash all get replaced with Tesla full self-driving. I don't know. Maybe. Wow. That looks like a nasty chart right there. I'd be careful. TJX cranking it. See, look at this. TJX. This is what I expect Gap to do. You know, some people are like, why are you messing with Gap? I expect Gap to go ripping. Now, Gap does have earnings tomorrow. Right now, you can sell an 18 for this Friday and get paid a fair amount, like 30, 40%. Annualized rate of return. That's a lot of downside protection. But it's not guaranteed. Nothing's guaranteed. This could dip. The dip could take it back down to here. I don't think so, but to be careful. MP, nice retrace to the roadmap line. I know it wasn't a popular thing when I said we were going to do it. Now we did it. Bring it back above this 76 level. 100, 120 might be in the cards. AGQ, be careful. Chasing silver. That can go higher. GLD coming back up a little bit. I'm cautious here. Humana doing that 618 retrace. That's an ABC. Absolutely beautiful correction. That looks like a 1, 2, 3. Might have a 4, 5. A little bit lower to go here. And it may be waiting on its buddy UNH to get down here into this ideal bounce zone right in here. If we can do that, puts this big upside potential into UNH. Also does that kind of for Humana. Big upside potential. So waiting on those. Emerald Marble, looking for this to break through this consolidation zone that's been resistance for almost 2 years. You know, banged our head on it here in December, flushed on down, coming back up. Need to get through it. If we do, has a nice big fat upside potential. FUTU probably come back down to the roadmap line. SQM. Ripping, baby. I'm bullish on FCX. Like, that's an opportunity. This has opportunity. We hit down here. Let me show you. Like, let me clear the up. Was not the right button. This right here. This move up, that retrace. Nice. This move up, that retrace. It's a nested setup in here. This has potential for a larger upside move when we break out, likely take us up here. When we get through this level, looking for the move here, probably retrace, then make a move up here, probably retrace, make a move on up higher. That's what I'm watching. This setup, we got to get through that downtrend of highs right there. Right now, that's kind of the crux of it. We break through, these are the upside potentials. It's probably going to do that. Progressive, maybe. Finally found a bottom here. We've got resistance. Unity. That looks too good to not hit the roadmap line right there. I would expect this to come down just a little bit more. Could it bounce from here? Sure, possible. 57.20 is the upside target right now. AEM, chopping in here. That's a potential to come down to the roadmap line. Be careful. First move down, retrace. Next move down. Believe whatever you want to believe. PPLT still has the upside target up here at 160. COHR. It's possible that we're done correcting. It's possible. This way up here, be careful. Lofty stuff, book your profits, move on to things that have upside potential. AMAT hasn't been up to new highs yet. 285, still at the upside target there. AU. Ashanti. Hanging out the highs. Keep going until the wax wings melt, and then watch out. This probably needs a little bit further downside. USD. Semiconductors. This could rip. PALL. Would really look best with further downside, but this one can pop more. Pop can keep popping. Once pop, can't stop. If we make it up to this 176 area, we got 1, 2, 1, 2, 3, 4, 5, 2, 2, and we could be well back up into the 250, maybe even 300 zone. PLTR, still expect this to hit the roadmap line. Still expect bigger pullback. Be careful. CCJ, still expect a further pullback. Careful. Wicks getting hammered. Punch in the face. That could be finally getting down to levels that might be done. Here's the low. Here's the high. We're getting really close. If it holds right here. Oops. If it holds right here, this could be bullish. Resistance right in here. The low, the high, the low, the target for next upside potential could be up here. If we get rocking and rolling up through the resistance, that's the upside on Wicks. I look at the decliners because a lot of times they're hitting support and they present the opportunities. VLO, look at that. After it hit the target, boom, right back to pushing all-time highs. MPC, touch the target, get ready to rock and roll. 243 on the upside. Eco. It's the lowest low. And watch out for a pullback, but that is looking like we could probably cruise on up to 45 there, maybe. Target, I think we have a date with lower prices, probably down around 50 to 70. And if that doesn't hold, we could be taking a trip on down to the 20s. Baidu. Looking for that roadmap line bounce to hold. To hold. Hold. There's the high, there's the low. Break back through. Next upside target right up in here. MU, watch out for the pullback. This is way over the ski tips. It needs another correction. It can do big corrections. It's done them before. Can do it again. Be careful. MSTR. Looking for this to hold the line here. If we can't, we at that level and this level. On down through there. Chevron. Just not being bullish here. Despite setting it up. Just not, did the daily pattern and just not following through. USO under the roadmap line, that's kind of bearish. And we took a look at oil. briefly. I just popped it up and moved on, I think. This is likely to flush on down 50 to 52. You follow Carolyn Brodin on X, that level triggered something for her, but for me, that was another danger sign because it's lower lows, or lower highs. Right there. Be careful. ANNX, trigger and target all in one. There was the high, there was the low. Already played out. AS. So this is actually grabbing this high right here. There was the entry, target 36.57. But I'd probably watch for the bigger pattern right here. Trigger up here at 36, basically 36.80. And we'd be looking for the target up here at 44.77. Casey's. It's pizza time. There's the entry. 582 target right up there. This has a long history of this working out, and it's pretty good. This would not be a bad bet if you wanted a nice slow trade to potentially make a few bucks. You could be in it for like 7 months though, so be careful. Kroger. I have lofty visions of Kroger working out here. It just stopped out this trade. It's been in for a few months, but it has a bigger upside potential here. Now, this bounce, it doesn't show up in the algorithm, but here's the high, here's the low. Potential entry, 70 target, and that's still a lower high and doesn't have to do anything crazy to get there. VNDA. This one came on the list a few months back. Played out. Here's the high. Here's the low. Entry, 593 target. And low price stuff, so be careful. Things under 20 bucks, I don't tend to go after very heavy because you don't have institutional support. I like to trade with the big traders. Just make, I like to pick up little scraps here and there around the big traders. And I do it over and over. Over and over and over and over and over. That's how I get these repeatable gains. Yeah, right here, I'm just picking up 40 bucks. Doing it 6 times. Do that do it every day, 40 bucks. Cost me 5,000 bucks to, I put down 5,000 bucks for 2 hours to make 40 bucks a day. If you do that for all 250 trading days that there are, that's 10,000 bucks a year. That's 200%. People don't think about the power of making 40 bucks every day. Now, I'm doing it times 6. That's $60,000 potentially. Picking up 40 bucks a day. Isn't that crazy? You can trust whatever you want to. You can not trust whatever you want to. You have the choice to trade big picture or not trade big picture. So be careful out there, everybody. Can't you save maybe your own? VIX dropping back down. Yeah, we held on to it through this morning. Pushing down violently. Now, the price that VIX settles at is not the open. It's some kind of combination of how it opens. It's difficult there. So be careful out there, everybody. I'll be on Market Masters at 11:30. It's about an hour and 15 minutes from now. And I'll be back. Same bad time, same bad channel tomorrow. Make sure you're subscribed. Give me a like if anything I said was helpful, beneficial. Give me a comment. Let me know how I can help you better. See you again tomorrow.